To invest in yourself, CFA Society Nigeria is at your disposal, promoting the highest standards of investment practice in Nigeria. As an affiliate of CFA Institute, CFA Society Nigeria seeks to promote the highest standards of investment practice in Nigeria and to provide a vibrant community in which its members and other key players in the investment industry can interact and grow. When you have the CFA charter, you're globally recognized. Take advantage today by writing the CFA exam and joining us at CFA Society Nigeria. For more information, visit us at cfasocietyn.org. CFA Society Nigeria, making finance a force for good.
Money Talks. Money Talks.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Yes, for me, I can hear you.
I can hear you.
Professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holder's commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyn.org for more details. CFA Society Nigeria, making finance a force for good.
Money Talks. Money Talks.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Hello everyone and welcome to Money Talks on 92.3 Inspiration FM. Smart Uzechi is my name. Money Talks is brought to you by CFA Society Nigeria and is a financial literacy program. Today my guest on the program is Dr. Isah Yao. Dr. Isah Yao is a PhD holder in Islamic banking and finance. He is an AAOIFI certified Sharia advisor and auditor, CSAA, and a fellow chartered certified accountant, FCCA UK, with over 20 years of cognate experience in the global finance, standard setting and regulatory landscape, including over 10 years in senior managerial supervisory roles. He's a senior manager working with the leading central bank that sets standards and regulates the largest financial markets in Africa. He's a trained trainer certified by the Islamic Financial Services Board, IFSB, and has trained staff of diverse central banks across the world in the field of Islamic banking regulation, adoption and implementation of IFSB standards. He has been a key resource in the development of IFSB global standards. Dr. Isah, in recognition of his outstanding track record of deliverables, was appointed as the central bank nominee that steered the development of the 10-year non-interest capital market master plan in 2015 in collaboration with the Securities and Exchange Commission capital market regulator. So let's make welcome our guests on the show this evening, Dr. Isah Yao. Dr. Isah, good evening to you, and thank you so much for joining us.
Thank you very much. It's my pleasure being here. Good evening.
Very well. And our point of conversation this evening is on non-interest financing as a tool of financial inclusion. Non-interest financing as a tool of financial inclusion. That should already catch your fancy. So stay with us. After this very short break, we will go back to Dr. Isah as we kickstart the conversation on Money Talks this evening. Please don't go away.
We are professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyng.org for more details. CFA Society Nigeria, making finance a force for good.
Money Talks. Money Talks.
Money Talks. Money Talks with CFA Society Nigeria. Let's talk about money.
Thank you so much for staying with us. Non-interest financing as a tool of financial inclusion is our conversation this evening, and Dr. Isah Yao, PhD, is our guest on the program. So, Dr. Isah, for starters, let me start by asking you what non-interest financing is, and I'll appreciate it as well if you can give us examples in different areas of the financial system, like banking, investment, insurance, and in all other sectors.
Okay, so thank you very much. Non-interest financing is a form of financing that is based on the principle of Islamic commercial jurisprudence that encourages risk sharing instead of risk transfer as we have in the conventional system. That's also built on ethical and social justice. Unlike in the conventional system where it's like a zero-sum game where somebody collects a loan and then subsequently pay with interest, in non-interest finance, the financial institutions go into partnership with their clients. At the end of the day, whatever profit is made is shared, and then if there's any loss is borne by the capital provider or by the partners as they go into such partnership. So we have different products in non-interest finance, just like we have in the conventional. So depending on the need of the customer, non-interest financial institutions have array of products. In the banking system, it may interest you to know that currently we have up to like 5 different banks operating in Nigeria that are non-interest. 4 of them are full-fledged, and then one is a window. And the good news is that they are in Lagos and they have national license, so they're spread all over the country. So depending on your need, a non-interest financial institution will be able to come up with a product that will suit your need. You want to buy a car, you want to build a house, you want to pay for your school fees, and name them. However, unlike in conventional banking that I said that the cash will be given to you as a loan, the non-interest financial institution will go into partnership to purchase such an item that you need, and they subsequently sell it to you for a profit. So that is for banking in a nutshell. Maybe as we go along, we'll now elaborate more. When you go to the insurance, we have what we call takaful companies. And also it may interest you to know that we have 4 full-fledged takaful companies. In the conventional insurance, you pay for claims through payment of premium. And then at the end of the year, if there's any claim, the insurance company will pay you. And then if there's no claim, the insurance company takes it all. That is not what happened in the non-interest insurance. Just 2 weeks ago, one of the big players in the non-interest financial institution, that's Isah, did what they call surplus sharing. So this is how it goes. You contribute money towards meeting of any incidental that may come up. If at the end of the year, the insurance company is not able to exhaust your contribution, that is, there's not enough claim to claim such amount, the balance is shared among the policy holders. That is one of the beauty of non-interest insurance that is called takaful. Also, when you go to the capital market, we have players as far back as 2008. Lotus Capital has been in the capital market in the non-interest space since 2008. And currently, we even have, in partnership with the Nigerian Stock Exchange, that is Nigerian Exchange, they have developed what they call the Nigerian Stock Exchange Lotus Islamic Index that track some Sharia-compliant indexes in the capital market. Also, I'm sure you are very much aware that the federal government have been raising funds through what they call sukuk. Sukuk is, like you can see, is the Sharia-compliant type of bond. Just last week, the federal government, through the Debt Management Office, went out to raise 150 billion, but it was able to raise, it was much oversubscribed to the tune of 600 and something billion. That's over 400% percent over and above the amount that has that the players, the DMO, went to raise in the market. So in all sphere of life, even the Pension Commission has in 2020 or thereabout introduced what they call Fund 6, which allow the retirees or the RSA to be invested in Sharia compliant instruments. So in all sphere of the Nigerian financial system, we have the non-interest version.
Thank you so much, Dr. Isah, for breaking that down. So the other term we'd like to break down for us here is financial inclusion. Help us, please.
Okay, so I'll talk about financial inclusion. At the center, also talk about financial exclusion. So when we talk about financial inclusion, we're talking about the totality of individuals that have access to financial system, that have used to financial product and services. When we talk about financial inclusion, 2 to 3 things are very important and they are key. One, the players have have products that meet their needs at affordable rates. So the issue of affordability and also easy access, these 3 things are really very important. Nigeria has what we call the Nigerian Financial Inclusion Strategy that has been driven by the central bank, where currently the totality of financial exclusion rate in the country is estimated about 39.5%. That means almost the financial inclusion rate is about 60%, which the central bank that anchored such program has a very ambitious, has a very big ambition to close this gap to as little as 25% financial exclusion by next year, that is 2024. So as I say, when we talk about financial inclusion, we also need to talk about financial exclusion. Financial exclusion simply means those people that are not included in the formal financial system. Even the financial exclusion will also have voluntary and involuntary. So I will start with the voluntary. Voluntary are people that, out of their own volition, decided to abstain from the financial system. Most of the time, studies have shown, the literature have shown that people do that out of maybe religious belief, because they believe there's interest or they don't want to join it, or maybe out of cultural belief. So, but for the involuntary, it could be due to a number of factors: low income, high risk. Most of the times, you see the big players in the financial system try to avoid the SME sector or some form of customers, which, as far as they are concerned, they are highly risky, so they may not really want to go into such area. The central bank and a lot of the players, the regulators, have done a lot in trying to encourage financial inclusion. The introduction of the tiered KYC, where the type of account is divided into 3, is one of the efforts that has been done by the central bank. And I know also in the NICOM, that's National Insurance, has also introduced what what they call micro or TACAF or micro insurance, also in the capital market, just to ensure that people are included in the financial system. Because studies have shown that inclusion leads to prosperity and has an inverse relationship with poverty. So the more people are included in the financial system, the more prosperous they are likely to be.
So, doctor, when you're talking about non-interest finance, it will excite a lot of people. But in the course of this discussion, you've been mentioning adherent of faith, of a particular faith. So the next question to ask you, I'm sure people who are listening there, will be to say that, Dr. Isah, this non-interest finance, is it only available to adherents of a particular faith, or is it open to everybody?
That's a very good question. It's open to everybody, and it will also interest you to know that some of the players that we have in the market don't even belong. They're not even Muslim. So it's completely open to everybody. It's just that the underlying principles are based on the Sharia. When you go to other countries like Turkey, they call it participatory finance. While in Nigeria, we call it non-interest. Even the name was intentional in order to ensure that people feel free to patronize this form of banking or of finance. So it does not discriminate. When you go to these banks, you see that their employees, their customers, is mixed. Most at times, even you see people from the other faith benefiting much more than people from the Islamic faith, because it's open, and a lot of businessmen feel that this makes a lot of sense. Whereas they are going to partner with me, and most at times, once they believe in your business, they can even finance you without necessarily a collateral. So it's open to all, and I hope after this program, especially yourself, you take a walk to one of the branches there in Lagos, of either Jaiz Bank, Taj Bank, or Lotus Bank, which are all present in Lagos, or even Alternative Bank. These are some of the big players. So, Dr. Isah, just so we are sure we're on the same page, you are saying that a Christian can walk into any of these banks and access these facilities that have non-interest to do their business. Yeah, so I'm not just saying that they can work. I want to assure you that Christians have been benefiting over the years. The first non-interest bank in Nigeria opened its doors in 2012, and it has been operating for more than 11 years now. So I assure you that some of its big customers are non-Muslim, are even from the Christian faith. And if you walk into their banking hall, you see a mixture of the two faiths working as employees in the bank. So that's to show you that there's no discrimination among the employees, no discrimination among customers, so it's open to all. Perhaps maybe your radio station will also try to work into one of them to see how you can partner to bolster your operation, so that instead of concentrating in Lagos, we'll get to hear you here in Abuja and around the country. That's very interesting. Very interesting. Yeah. You can call us on the telephone line now, 0700 923 923 923. That's the number to call us. If you want to ask Dr. Isah Yao questions about this non-interest financing for your business, it's time for you to do that. 0700 923 923 923, or you can send us a message on WhatsApp 0817 313 6193. If you're a business person, I feel that this is a very, very great opportunity for you. Either you're in business now or you're intending to go into business, you can access non-interest finance to be able to do that. So, Dr. Isah, as the calls are coming in, I want you to help us here with the differences and similarities between this non-interest finance you're talking about and its regular counterparts that are out there. Okay, thank you very much. First and foremost, both non-interest as well as component financing are there to perform the intermediation functions, that is to close the gap between the haves and the have-not. And remember, because it is called non-interest doesn't mean it is completely free, but no, rather they make their profit, they make their returns in a different way from the way the conventional banks are doing it. So first and foremost, it does not deal in interest, which is very important. Secondly, you don't sell what you don't have. This is a fundamental principle or even maxim in non-interest financing. So whatever you want, the bank must first and foremost own such an asset before subsequently selling to you. And also they have some non-permissible activities. So for example, whatever is deemed to be injurious to society, they cannot invest in such industry or such sectors. So they don't go into alcohol. They cannot invest in brothels. They cannot finance armament, and the likes. Anything that they feel is injurious to the society, they are not allowed to finance such businesses. And also, instead of charging of interest, as I said, rather what they charge is the share profit, and then if there's any loss is being borne by the partners in accordance with pre-agreed, accordance with capital contribution, whereas profit, if any, is shared in accordance to pre-agreed profit sharing ratio. These are some of the differences, and that I heard a lot more. It's just that we have very limited time. I can see our time running out already.
Yes, just to emphasize.
So I'll take questions.
Yeah, those of you who are listening, you can call us on 0700-923-923-923 if you have any questions to ask, or you can send us a message on WhatsApp 0817-313-6193. Today we're discussing non-interest financing as a tool of financial inclusion, and Dr. Isah is our guest on the program this evening. Those of you on the Zoom call as well, you can just raise your hand if you want to make any contribution or you want to ask a question. We can as well bring you in. So Dr. Isah, how do non-interest products, some of which you have mentioned here, how do they contribute to deepening financial inclusion in Nigeria, since you already told us about financial inclusion earlier?
Okay, so thank you once again. Just like the example that I gave earlier, the issue of Sukuk. You see, from 2017 to date, when the federal government started issuing Sukuk, the federal government have successfully raised over 900 billion naira. Okay, you have a question?
Yes, there's a call on the line. Hello, good evening to you.
Good evening, sir.
Thank you so much for calling. Tell us your name and where you're calling us from.
I'm Tony Alexander. I'm calling you from Ogun State.
Okay, quickly, Tony, let's have your contribution.
I want to ask Dr. Isah, please, what will take one to become a member? That is number one. Number two, I'm a farmer. Is there any provision, any room for a farmer? Thank you, sir.
Okay, thank you very much. So you keep listening. Dr. Isah will answer. Go ahead, sir.
Okay, but I didn't hear his question, so perhaps you may have to rephrase it to me. I couldn't hear anything.
Okay, he said, what does it take to be a member? I'm sure what he means by being a member is to be a beneficiary, and that as a farmer, what will it take him to actually benefit?
Okay, so the same way that you can be a customer, I'm sure he means maybe to be a client or a customer. The same way that can be a customer for a conventional bank is the same way. So you are free to walk into any of the banks. As I said, we have 4 of them that are full-fledged and 1 that is a window. We also have a number of microfinance banks that are non-interest. So it's just for you to walk into their office and then have a discussion with them, the same KYC, the same format that conventional bank goes through. And because of lack of time, perhaps maybe with your permission, I could just take maybe a minute or two to explain some of the products, one of which I'm sure will interest our caller, that is usually used for farmers. There's a product called Salam. Salam is like your forward sale. So what the bank will usually do is to estimate what are you used to producing. So let's assume caller here is a farmer that produces rice. So there will be an agreement that, okay, you are likely to produce 100 bags of rice, and then, okay, the bank will now buy those rice before they are being produced, and let's assume the bank will now buy the rice for, let's say, 10,000 naira per bag. What the bank will do is to enter into a Salam agreement with you to say, okay, at harvest, you are going to supply me these 10 bags of rice at 100,000 per bag. The bank will pay you upfront such amount, and then at the time of harvest, you have to supply the bank with such product. Typically, what the bank will do is to look for another customer that is in need of that rice, and they subsequently sell to him or her, and then make a margin out of that. The banks do that a lot. Also, even in the intervention schemes that the central bank introduced, about 11 of them have the non-interest versions that are being given to customers using the non-interest principle rather than the convention that charges interest. So I'll encourage all listeners to find time to go and visit these banks. As I say, we have about 5 of them. 4 that are full-fledged and one that is a window, and all of them have branches in Lagos. So feel free to go to them. We have Jaiz, we have Taj, we have Lotus, we have Alternative Bank, and even SunTrust has a window. So I will encourage people to go through, have a discussion with them, and you hopefully be glad you do that.
I think you took that question out of our mouth because the last question here for you is to tell us how people and micro and small businesses can actually access these non-financial products you're talking about just by walking into any of these banks and doing what?
Okay, so as I said, a bank is a bank and is being regulated by all the regulators in the country. As such, there are laid down rules and regulations to establish banking relationship, one of which is the issue of KYC, that is know your customer. So whether it's a conventional or non-interest bank, the bank will have to, as a matter of regulation, ensure that it does all that. And also the bank is not a charitable organization, yet it makes its profit in a different way. So the bank will do its own due diligence to ensure that the customer is credit worthy, and especially the business. So one of the interesting things about non-interest finance is that the emphasis is more on the business paying back whatever has been advanced to it rather than on the customer's repayment ability. As such, the bank will definitely do its own due diligence on your business, the cash flow of that business, and the viability of such business. And if the bank is convinced and you're able to establish a relationship, and then the relationship will kickstart from there. So please find time to go and meet and visit any of these banks, and I'm sure you'll be glad that you do.
Maybe one more time, you need to let us know the restrictions around this sort of financing. You had mentioned some sectors that these banks will not support.
Yeah. Okay, so as I said, just have it in your mind, Mr. Daniel. Any sector that I could say is injurious, for example, like tobacco, like alcohol, like brothel, like armament, and maybe like pork, any other thing, but any other business that is a genuine business. You have a radio station. Okay,
Dr. Isah, just a moment. We'll have a caller. I don't know if you can hear this caller. Hello, good evening to you.
Good evening.
Thank you. Tell us your name and where you're calling from. Yeah. Hello, this is Inspiration FM.
Am I calling Las Gidi FM?
This is Inspiration 92.3 FM. Thank you very much. So, Dr. Isah, go ahead and wrap up now.
Okay, so what I'm saying is that any sector of the economy that I think is injurious to the society, definitely the bank will not go there. So I gave example of intoxicants, I gave example of brothel, I gave example of armament and the likes. But any other genuine business, as I gave an example, you have a radio station, you're wearing a very nice suit, so perhaps maybe you're in the production of suits or shirts, or maybe you're in the production of beverages that are not alcoholic, or maybe you're in the transportation business. There's one of the products called Ijara, which is lease. So the bank can buy a vehicle for you and subsequently lease to you, and then you'll be paying rentals. And the interesting thing is that should something happen to that car that is of no negligence from your own side, the bank is ready to bear such losses. So that is why, as I told you earlier, the whole concept is about risk sharing rather than risk transfer that obtains in the conventional realm.
So, Dr. Isah, in case there are people out there, because if you gather like 10 business people in this room and you ask them what their biggest challenge is, they will tell you lack of access to finance. And why don't you go to the bank? They will tell you, these banks, they want you to have had a record, that they prefer to deal with those already established in business rather than to deal with startups. Startups and this sort of banking, what chances do they have?
They have a very big chance. As I said earlier, and I'm going to reiterate, a bank is a bank, definitely you do a due diligence. However, one of the key difference between conventional and non-interest is that non-interest lay more emphasis on the ability of the business to pay back whatever finances is financing to you rather than you as an individual. So if your business is viable, be rest assured, I strongly believe the bank will be there to finance you. One of the most interesting products is called Mudaraba, which is like a venture capital. So the bank will advance you funding, and then all you need to do is to have the expertise to run the business. At the end of the day, you share any profit. If there's any loss, genuine loss, the bank will be ready to take it.
Thank you very much, Dr. Isah Yao. We've been discussing non-interest financing as a tool of financial inclusion. We must thank you so much, Dr. Isah, for your time on the program this evening. We're very grateful for that.
Thank you very much. My pleasure always. Have a wonderful evening.
You too, sir. That's our program today. You join us again next Monday at 4:30 p.m. for another edition of Money Talks. Smart Uzechi is my name.